Okay, let's dive right into an incredibly powerful business structure that can literally lock down your hard-earned assets. If you're a business owner and you're looking to scale up, you've probably heard folks throwing around the term Series LLC, right? It sounds super fancy, maybe even a little intimidating. But what exactly is it? Well, today we're going to break this whole thing down so you can understand it perfectly.
But real quick, before we begin, just a brief note on our standard intro disclaimer. This explainer is strictly for general educational purposes only. It is not legal, tax, or financial advice. You know the drill. Always consult a pro for your specific situation.
All right, welcome to the Business Basics Hub. I am so thrilled you're joining us today. This is the place where we take those super complex business concepts and break them down into simple, actionable steps specifically for you beginner owners out there. We literally leave the heavy jargon at the door and just focus on absolute clarity.
So here's our roadmap for today's explainer. We're going to cover what a Series LLC actually is, why it matters so much, a quick 10-step guide to creating one, common beginner mistakes to avoid, and finally, how to figure out if it's actually the right move for you.
Jumping right into Section 1. What exactly is a Series LLC? Let's get into the plain English guide.
So at its core, a Series LLC allows one overarching parent LLC to create multiple smaller, totally separate divisions right underneath it. Each of these little divisions is what we call a series, or sometimes a cell. Actually, think of it kind of like a grapefruit cut in half. The peel on the outside, that's your parent LLC. It's holding the whole shebang together. But inside, each individual segment of the fruit is completely separated from the others by a natural wall. Every single one of those protected segments represents a series.
To put that into perspective, while a regular LLC basically lumps all your risk into one giant bucket, a Series LLC gives you separate, tiny buckets. In a standard LLC, if someone sues your company, boom, all your assets are sitting in one giant legal silo, and they're potentially at risk. But the Series LLC, it creates multiple internal silos under just one legal umbrella. The whole point here is to keep a problem with one asset from totally ruining all the others.
Moving on to Section 2, why this matters. Let's talk cost and protection.
This structure is a real game changer because it perfectly combines protection with efficiency. By using a Series LLC, you are going to save money on filing fees, plain and simple. Why? Because you aren't paying the state to open up 10 completely separate LLCs. You just have one single parent filing and one registered agent. But here's the magic. You still get that theoretical liability separation. Say you put your rental houses in different series. A lawsuit from a bad tenant in Property 1 literally cannot touch the assets sitting nice and safe in Property 2. It completely streamlines your management while totally isolating your risks.
Okay, Section 3. 10 steps to create one. Let's walk through the step-by-step. Step 1, and this is huge. You got to choose the right state. You know, not all states even allow Series LLCs. Places like Delaware, Texas, and Wyoming are super popular for this. Step 2. Check the name availability for both your parent company and your specific series names. Step 3. Go ahead and appoint a registered agent in that state. Step 4. You're going to file your articles of organization with the state. Now make sure you include the specific legal language that clearly states you will have separate series. And Step 5, which is absolutely crucial here, guys, draft a rock-solid operating agreement. Your operating agreement is literally the backbone that authorizes the series and dictates exactly how they have to operate separately.
Continuing right along. Step 6. Officially create each series based on your state-specific rules. Step 7. Obtain separate EINs, employer identification numbers, for each series directly from the IRS. Step 8. Open up completely separate bank accounts. Step 9. Properly transfer your assets into the right series using a formal written document. And finally, Step 10. Get all your tax and license registrations sorted out. The big takeaway here, once that parent is set up, you have to treat every single child series like a completely real standalone business.
All right, Section 4, Common Beginner Mistakes. Let's talk about how to protect your shields.
Listen up, because these are the deadly mistakes that can ruin everything. You absolutely must avoid sharing bank accounts between your series or commingling your funds. I mean it. No way can you pay a bill for Series A out of Series B's checking account. If you share accounts or mix up the money, a judge will pierce your liability shield entirely. And that means all that hard work you just did was for nothing. Airtight separateness is the golden rule here. Honestly, treat these accounts like a bad breakup. Keep everything completely separated or things are going to get messy really fast.
Also, don't forget to sign your contracts using the exact series name, and whatever you do, never ignore state tax rules. Some states actually require totally separate tax filings for every single series.
And that brings us to Section 5. Is it right for you? Let's make the choice.
So, here's the honest truth, folks. While this structure is totally amazing for multi-property real estate investors who keep absolutely impeccable books, or maybe entrepreneurs running several distinct brands, a traditional LLC is honestly often a lot safer and much simpler for your everyday small business owner. If you've just got a single business activity, or if you just really want simple accounting, you're going to want to avoid this setup. Oh, and you should definitely avoid it if you operate mostly in a state that doesn't even recognize them yet, like Georgia, for instance. Just not worth the headache.
To wrap things up today, here's our standard Business Basics Hub outro disclaimer. Just a quick reminder that this content is strictly for general educational purposes and is not legal, tax, or financial advice. Laws and requirements vary heavily by state, so please always consult a tax-smart CPA or an attorney to make sure you're setting your business up correctly.
Well, thanks so much for tuning in to this explainer. If this gave you a little bit of valuable business clarity today, it'd mean the world if you could subscribe to the channel and hit that notification bell so you know the second new content drops. Don't forget to give it a like, and hey, feel free to share it with a friend who's maybe starting a business too. So, I'll leave you with this question to think about. Is the Series LLC the ultimate cost-saving shield for your growing empire, or is it just a complex web that might actually trip you up? Keep learning, keep protecting those assets, and I will see you in the next one.